Hello everyone. Let's have a look at the market snapshot for this week. The Indian markets have been very strong. The advances were higher than the declines for sixth straight session. So pretty good going there. We had almost 280 advances against 220 of declines. New highs for the first time. New highs touched almost 25 against new lows of 475. Why this number is important? Because I think in last 50 sessions new highs have not crossed 20 as a benchmark, so this number really makes sense. And the good part is it has been supported by the partner, by the leadership and the breadth in the market. Let's look at the breadth. Looking very strong here to above 20 MA, almost touching 400 stocks. This is for Nifty 500. Above 50 MA, almost 330, 320 stocks. Above 200 MA, around 270 to 80 stocks. So very strong breadth, I would say. The good part again, it has sustained throughout this week, so which is very good. Let's look at the chart. See, very good. I mean, this chart was not looking so good, but I think yesterday's uh fall back, and then it covered during the day the entire fall which it had given up. So I think this is what I would have liked about Nifty 50's chart, that it hovers here. See, if it just keeps running, I don't know if how sustainable that fall will be, that rise would be, sorry. But then if it hovers around these levels with participation and breadth in the background, I think that makes this chart beautiful. Still not one of the very strongest chart, but not bad for sure. If we look at what was happening in Nifty, it was just going down. So pretty good going there. Nifty 500 looks very strong chart. I mean, I think it has got all the attributes of a strong chart. I mean, it made a low rise back, then it consolidated between this zone, and now at these breakout levels it is trying to consolidate and form a base again. Very strong chart, so I think I like this too. No surprises on the trend front. Nifty 50 looks bullish, above trading above 50 MA, participation mixed, breadth strong. Nifty 500 just a mirror image, bullish, trading above 50 MA, participation mixed, breadth is strong. So I mean, why I'm not very much worried about the participation of yesterday in both the indices, because see, the thing is, like every day we cannot expect an indice to just keep going up and up, because like these are indices of the country. I mean, they trade 50 most valuable companies in the country. 500 again, mostly large cap, mid cap companies in the country, so they just cannot be going in one direction. So that is the reason I'm not worried about what happened if the participation was mixed yesterday. Rest, I think it is looking very good, very strong, I would say. US participation, this has become very volatile, right? I mean, we are seeing huge advances in one session, then huge declines in another session. So I think this has become volatile. Again, the advances were higher than the declines, almost touching 300 against 220 240 odd in the declines. New highs, I think they had around 10 new highs against almost 490 new lows. Breadth has started deteriorating. That is what I don't like about the market. Above 20 EMA, almost 250 stocks. Above 50 EMA, 270 stocks. Above 200 EMA, touching 300 stocks. So for me, US has become volatile. It is doing everything which a volatile market does. So yeah, I'm not very confident at the moment. I'm not bearish about the market, but I'm just waiting. If at all the breadth covers up, for sure I would be interested. I'm not bearish, but I'm not building new positions. Look at the chart looks beautiful. Chart looks very strong. It's a higher high making chart, respecting 50 EMA, making new highs, but I just feel it has become volatile after this particular session, so it is just hovering around those levels. This is Nasdaq 100. This is S&P 500, same chart, very bullish looking chart, respecting the 50 MA, trying to cover up the previous high, but I think it is volatile again. Russell 2000, very similar looking chart, had made a new high and now who's trying to breach that. but again is struggling, respecting 50 EMA. So let's look what is happening in the US markets. Nasdaq looks bullish. Part Trading above 50 EMA, participation is strong, breadth weak. This is where I'll be concerned. If breadth is mixed or weak, that is what makes me concerned. Participation mixed, strong, all that is okay, but breadth is very, very important to me. S&P 500 bullish, trading above 50 EMA, participation mixed, breadth mixed. Russell 2000 bullish, trading above 50 EMA, participation strong, breadth mixed. So again, if you look, breadth is not is not giving fuel to that rise. That's the reason I'm very cautious about the US markets. I'm not building new positions. On the contrary, it is said, see, for the US market, the biggest driver is Nasdaq. Although like a lot of small caps, mid caps come from S&P 500, Russell 2000, but the biggest, because the country is driven by innovation, technology. So the moment the breadth of Nasdaq 100 is weak, it is better that we become cautious about it. That is what I would suggest. Macro dashboard, this is the second indicator which tells us that US is not looking very good. US yields are rising, dollar is rising, VIX is neutral, which is surprising, BTC is bearish, again a confirmation, gold bearish, again a confirmation. As I've told before, rising yields, rising dollar, falling BTC, falling gold just indicates equity might not be the most interesting asset class for institutional investors in the US to go for, and that is the reason we see so much of volatility in the US equity markets. On the dashboard, for me, India remains strong, US looks mixed, macro looks neutral. So for sure, I'll like to take new positions in the Indian market, and for sure, for time being, I will avoid US markets. I'm not bearish on it, but I'm not confident. That's the reason. Uh, so where do I look find strengths in both these markets? For the Indian markets, if you are sectoral, I like the health and PSU segment. The strongest stocks which I find are Cupid, HFCL, Tata Capital, RBL Bank, Anand Rathi, Polycap, Federal Bank, Nevin, Florin, Radico, CG Power. For US market, this again is an indicator that risky assets are not getting a lot of transition. So for instance, finance and industrial sectors are on the rise. That means people are looking towards hard assets, and the strongest stocks in this market are SNDK, CAT, INTC, ADI, MU, APH, GE, GS, LIN, TXN. So yeah, for next week, these will be the scripts where I'll be most interested in for my positions. The takeaway, India looks very strong, breadth participation improving significantly. I'm very, very focused on this market for the moment. US breadth not supportive of the rise. Wait and watch. It is a wait and watch for me. Dollar yields continue to rise, moving yields to won't be a bad idea. Bitcoin gold remains weak, suggesting risk appetite is subdued. VIX around 16, indicating no signs of panic. So the final takeaway for me, Indian markets are a go-to place. For the US markets, it is I'll be very, very cautious. In fact, I'm not even making any new positions. If you are someone who's very aggressive, you want to make some money and you don't want to put your cash to idle position, maybe moving to yields is not a bad idea. At the same time, you can try looking for shorting positions in Bitcoin or gold, that there could also be some trades here and there. At the same time, you can have a look at the watch list which I gave. Mostly, you might get some opportunities there in both the markets. That's all, everything for this week. And hope you all found this useful, and see you next time on Monday. Thank you so much and have a good one.